Good morning, traders. It's the 7th of October. We are Signal Centre Talking Bull. I'm Joe, joined by Taff this morning. How you doing, Taff?
I'm good, man. I'm good. You all right?
Yeah, not too bad, thank you.
Nice, man.
Okay, so it's the end of the week. It's Non-Farm Friday.
Mm.
Been a interesting week yet again. So let's just go through the latest headlines over the last 24 hours that have been moving markets before we then move on to the charts and dissect the price action of the last 24 hours and how things are looking going into that all important number later today, and obviously be closing off the week as well. So in terms of the headlines, the US jobless claims increased yesterday. The number of claims increased to 219,000 in the latest week from a revised number of 190,000 previously. This was above the consensus forecast of 203,000, while continuing claims also increased to 1.36 million from 1.35 million. Challenger reported layoffs of just below 30,000 for September, a 68% increase for the previous year. And the survey also reported that hire intentions had declined to their lowest level since September 2011. So pretty significant stuff. And of course, the Fed will be watching these numbers to make sure that they stay on top of their policies with regards to supporting the economy. Now, I think Labour's kind of been the last bit of the puzzle, really. Obviously, we've seen other bits of the economy come under pressure, but jobs have been quite good throughout that period. But now we are starting to see the number of claims of joblessness increase, and we're seeing more layoffs. And as it said there in the report, the hiring intentions of companies is starting to reduce as well. So that's not a great sign. We've continued to see more hawkish rhetoric from the Fed chairs and the people on the Fed board. The Minneapolis Fed president stated that he is seeing almost no evidence that inflation has peaked. He added that he was not comfortable with saying that the Fed is going to pause until there is evidence that the underlying inflation is cooling. The Chicago Fed president stated that core inflation is a concern and that the Fed will look to raise rates by a further 125 basis points over the next two meetings. The governor, Waller, stated that the Fed is not considering slowing rate hikes on financial stability concerns. And then we had another Fed governor state that the Fed was willing to change course as the data evolves. So nothing indicating that they're going to slow down the rate hikes for the time being. Again, we saw US yields increase. The relentless hawkish Fed rhetoric pushed yields higher. The 10-year increased to highs above 3.8% before stabilizing. The US dollar saw fresh support as well. We had seen that correct a tad in recent sessions on hopes that we would start to see some improvements in the economy, but it seems as though money has flocked back into the US dollar, looking for defensive safe havens. So we do have the jobs report today that will be well watched. It generally creates quite a substantial amount of volatility. It will be very crucial for the short-term market direction. The consensus forecasts are for an increase in non-farm payrolls to around 265,000 from a number of 315,000 previously. The unemployment rate is expected to hold at 3.7%, with an increase in average hourly earnings of 0.3%. Weak data would increase speculation of a Fed pivot. So we were talking about this earlier in the week as well. It seems to be that we're in a phase where bad news is good news for the market, because there are market participants that are hoping for the Fed to eventually pivot and start being more supportive of the economy and maybe temper the rate hikes that we've been talking about. In the UK, there was weak construction numbers yesterday. The UK PMI construction index rebounded to a 3-month high, but overall business confidence declined to its lowest level since July 2020, maintaining concerns over the outlook. In terms of the Bank of Canada, the Bank of Canada governor stated that there were still important inflation concerns and that further rate hikes are in the pipeline. So bracing ourselves for further rate hikes there. So let's move on to the charts now and take a look at what's happening on the across asset classes. Let's start off with FX, as we usually do. We look at the dollar index to start with, because this really is the number one asset, as Taff keeps telling me dollar is king. And
Yeah,
looking at this
dollar's
chart,
king.
dollar, looking at this chart, you can't really disagree with that. So we've got a very substantial uptrend that has seen a few minor corrections along the way. The latest one playing out in the last few sessions. We peaked on the 28th of September before dipping down to lows of 110.05, but then we've seen a substantial turnaround. So on the 5th of October, we posted this bullish engulfing candle, and yesterday we saw some decent follow through as well. Little bit flat as things stand at the minute, which is to be expected ahead of such an important number for the US economy. So for now, it looks like that was just a pullback, a very minor correction, and we are set to maybe go on challenge those highs that we posted on the 28th of September up at 114.77. So, of course, that's having a knock-on impact on the likes of Euro US dollar. This continues to be trapped within this bearish channel. It's very neat indeed, actually, and the rally that we saw take shape over the last week or so seems to now be fizzling out. It got as high as just under parity, basically 99.99. Before stalling and reversing, and looks as though that could be heading back towards those lows again that we posted back on the 28th of September, coming in at 95.35. If that level starts to give way, then there's quite a lot of fresh air actually on the downside with this one. We are going back to levels not seen since 2002. Just if we're going to pick a level, I would say that high there from the 17th of September 2001 would be a reasonable target in the short term. That's at 93.32. Let's take a quick look at cable then. What's going on there? So we saw a really sharp move on the back of this intervention from the Bank of England last week, but again this now seems to be fizzling out. Really strong move to the upside, rallied towards resistance at 114.22. We got a little bit above that, eventually peaking out at prices of, let's just take a quick look, 114.95, and now we've started to turn to the downside. So big downtrend in place, no signs of it slowing, still trading in a sequence of lower highs and lower lows. So therefore, it could be that we do see a revisit down towards these numbers. Obviously, this was created by the mini budget that came out from the UK, and then we tried to see the Bank of England correct the course because it was quite frankly a disaster. So we'll see if there's going to be more support. We know that the Bank of England are buying long dated gilts, and from what I've seen, they've not been too active in that market for the last couple of days, and there is a period of time that they're looking to basically support that market. So maybe we'll see them step in again at some point soon and try and defend that market. So I'm just going to focus on those three FX markets today. Unless anybody wants me to look at something else ahead of non-farm payrolls, then please post up on the live chat on the stream and we'll get back to that shortly. Let's move on to the indices, taking a look at the European markets to start. The DAX appears to be rolling over to the downside as well. We saw a decent rally following the breakdown of this major support at 12,431, eventually bottomed out at 11,810. And the rally now appears to be fizzling. That was at 12,704, and we're now, as I say, rolling over to the downside. So it'll be interesting to see if there's any more pressure going into this market to close the week off. And of course, we've got the non-farm payrolls, which doesn't directly impact the European markets, but it is one of those numbers that tends to have a wide-ranging effect in terms of the volatility that it can create. So let's keep an eye on that later today. FTSE 100, that's been really interesting, which you don't often say about the FTSE 100, but this major level here that we've got on the chart at 68.22 up to 68.47 has been doing a pretty special job at providing support. Going back to May 2021, we can see there's been a number of touch points on this level, and each time it has created a pretty substantial move to the upside. In the last couple of sessions, well, in fact, yesterday in particular, we got as high as 71.06 before reversing course and actually closing on or pretty much close to the lows of the session, which is never a good sign. A little bit of a bounce today, up by 0.3%, maybe helped by the US dollar. A lot of the companies that are based in the FTSE 100 generate revenue in the US dollar as opposed to our domestic currency, which is why you see it holding up quite well compared to other markets at the moment. Looking at the US markets then, let's take a look at the Nasdaq. So major support in place at 11,035. We saw a look below that on Monday this week. We got down as low as 10,829 before reversing. We saw a really nice 2-day rally, but then prices have started to flatten out and in fact start to roll over to the downside. We are slightly higher today, but it looks as though we are still trading in a sequence of lower highs and lower lows. So expecting maybe to see a re-challenge of this low that we posted on Monday as a bare minimum. If that fails to hold, then quite close by, we've got a 61.8% fib level at 10,500. Looking at the S&P 500, similar sort of situation. We bounced quite substantially from a major support 36.36. We did see a little bit of an overshoot of that level. We eventually got down to lows of 35.59. Decent rally over 2 days, but now that's starting to roll over. So not really been any kind of follow through to the upside here. So I would be looking again for a retest of this low at some point in the not too distant future. The head and shoulders top pattern that we've got on the chart here, which goes back to really 2021. We've got a measured move target on that down at 33.96. So that would be a decent level to target in the short to medium term. So I'm going to leave it there for the US indices. Samo on the TradingView stream has asked for us to take a look at dollar CAD. So let's flick back to that chart and see what's going on there, shall we? Again, if anybody wants us to take a look at markets that we're not covering, please just feel free to ask and we'll do our best to give them some coverage. So this is the US dollar versus the Canadian dollar. As we can see, there is a dominant uptrend clearly in place. We've got a resistance level that goes back to a number of previous lows in 2020. We saw a big breakdown from that level, and that really kickstart that big move to the downside. We're now revisiting that level, coming up just shy of it as things stand. But one thing you can notice about this chart on the daily chart, that is, price action been exceptionally choppy over the last few weeks or so, really starting from the 26th of September. We've seen some really big ranges in the price. We come up just shy of that resistance at 138.55, and then we posted this candle here on the 3rd of October, a really large bearish engulfing candle. So I was actually looking at this thinking we're into this resistance level. We also saw a close below the 10-period exponential moving average on the 4th of October. And for me, I was thinking maybe we are going to see a little bit of a turnaround here, and we could start speculating on some shorts. We also saw that pullback in the dollar index as well, which gave us some encouragement. But we've seen a pretty sharp turnaround here as well. So back on the front foot. And for me, the chances are we're going to go and retest those resistance levels at 138.37. My short experiment didn't work on dollar CAD, so out of that. And now focusing back on the dominant trend, which clearly is higher. So for me, looking though, we're going to get towards 138.37 to 138.55. If we then start to break above those levels, then referring back to the left-hand side of the chart, we've got a cluster of price action here, which may provide some resistance. But if it doesn't, then I guess we'll be targeting these previous highs that we posted back in March 2020, all the way up at 146.67. Let's just take a quick look actually and see if there's any fib levels here that provide any interest. Yeah, so we've got the 78.6% fib. That's at 140.98. So that would be a decent level to target as well if we can break above these resistance levels that we've posted on the daily chart. Hopefully that was helpful, Samo. Again, anybody else wants us to look at anything, please feel free to post it up on the chat and we'll do our best to cover it. That's it from me. Taff, I'm going to fire it over to you and you can run me through some assets as well.
All right. I'll start off on the commodities. I'll start off with gold. Let's just take a look at what happened yesterday. All right, here we go. Remove the cloud. So yesterday I talked about the candle that we had the day before that, and I was looking for a filling up of the wick here. So I was looking for bearish momentum, and then yesterday we kind of had bearish momentum, but it wasn't. We didn't have that much impetus in it. What did that look like on the intraday level? Okay, this is what we have on the intraday level here. So pretty much my support and resistances that I put yesterday are pretty much still in still in place and they're still valid. We're going to have a lot of obviously volatility today because of the non-farm payrolls coming out. But what I envisage to happen is I'm looking at a break of this first support here. If we break this first support, retest it, and then a rejection from that, then I'll be looking to take some off from my second support here, and then I'm looking to probably the ultimate target would be 1658 down there. So my bias is bearish on gold. We've got this trend line here that's forming out. It's a weak trend line, but we could probably have a bit of bullish momentum coming up here, testing it, and then coming down all the way here. Then again, remember, price is unpredictable. So the levels that I'm putting there are just a guide. They're a guide. They're the money spot, in other words. So you're looking for price to. It could come up to the resistance here, reject it, and then come down again, or it could break this resistance, test it, and then go to the second resistance. So these are pretty much just like a guide that you use to get in the money and to get out of the money. Let's go to silver. I think that was my gun to the head trade yesterday for silver. I think it just ended pretty much flat. So silver, again, we can see that yesterday's candle was pretty much a dodgy. So it shows a lot of indecision, which should be expected as we're going into non-farm payrolls. So today will really pretty much shape the direction that will be going. This was my gun to the head. It ended pretty much flat. So silver, just like gold, I've got my support and resistances here. I am still my bias is still bearish here, but the money spot really, what I would really want to see is probably a break of this. I would want to see volatility take price up to the first resistance here. Then I'd rather short it from here, target my first support, which is 20.07, and then the second take profit would be 19.70. So these two are really my money spots here. The first resistance at 21.22 and the second support at 19.70. These two are really my money spot. So I want price to come up here, and then and then it comes down here, or rather, price could move all the way down here, and I'd go for a probable long with a tight stop, and then probably target probably this trend line here. So I mean those intraday levels are really what I'm looking at today for silver. Again, volatility is there with the NFPs coming out later on in the afternoon, so you should take that into consideration. Let's go to crude oil. Crude oil is currently on a support, on a resistance. We had this momentum, this bullish momentum that started all the way from Tuesday, 27 September, and we're currently on a intermediate resistance here. This is the baseline level, or the 50% fib retracement from this high. I mentioned it yesterday, from this high here down to here. Is that it? Okay, wait, just. Oh, okay, no. This is actually just the baseline that is corresponding to this baseline here, this level here, this resistance here. Price came up, rejected here. Price came down, came up again, rejected here. So this is a formidable support. So we'll see what price does. Let's go to the intraday and see what that looks like on the intraday. There you go. So yesterday I talked about crude oil, and I talked about the macro, the OPEC versus the US and everything. But I said we should just stick to the technicals and see what the technicals are telling us. My bias was bearish yesterday for crude oil, but the bias bearish was only if we broke this support at 87, retested it, and then rejected it. That's the only way I was going to take a short trade on this. But then what happened is we came to the support and then we rejected it. So if you go down to the hourly candle here, you see this doji here. This would have been a perfect entry for an intraday trader for a long position, because look, the support held, right? We came down, we tested it, we didn't break it, it held. We formed a doji. This would have been a perfect risk reward day trade for someone was looking at this. and I think you'd have made at least maybe 3 or so, to about 2.85 or something like that on this. So again, like I'm saying, the really the support and resistances that I'm putting out here are really your money spots. This is the place that you want to see activity in terms of entering the market. You want to see activity in terms of taking some profit off the market, or just your ultimate target. So what am I looking at today? Today I'm looking at this first resistance. This is my money spot. Yeah, this is where, if I'm going to take a trade, this is where I'll probably take a trade. If I'm going to short it, I'll short it from here on rejection of the first resistance at 89.44, or alternatively, a break of this first support here, and then retest and then rejection again. Remember, I'm not just getting in on the break, but then I want price to come and retest it, get some liquidity, and then when we reject it, then I get in. So those two are really my money spots. Rejection of this resistance at 89.44, and then break and retest of the 87 zone here, and then I'll target 84.5 first target, and then ultimately the ultimate target would be about 82.55 for a short. But for a long, if we manage to break the first resistance here, if we retest it, and then on rejection, I'll take a long and possibly target this second resistance at 92.60, and then ultimately at 95.00. So again, your support and resistance levels are really just your money spots there. Let's go to natural gas. Natural gas, I talked about the macros behind it again. The EU wants to put a price cap, and Russia is saying, look, we won't sell the gas to anyone who participates. But anyway, I talked about this channel here that is formed, and then I talked about this resistance here. This was respected this time. It didn't quite reach there now this time, but then it came here, it bounced, we broke it. So I'm looking to really come up again and test it. What does that look like on the intraday? The intraday, we have a bullish head and shoulders here that I talked about yesterday, and I said this is the zone that I want to see. This is the money spot. Remember, I said the money spot is the place that you're going to enter or you're going to take some off. As you can see now, we're rejecting here. This is the hourly candle we're rejecting here. So this is playing pretty much according to script. We're rejecting this this zone here. So as an intraday trader, I would put my long here. In fact, I think this would be my my gun to the head trade here. Put my tights. Okay, maybe just give it a bit of room, and then just take it all the way up there. So we're seeing price rejecting that zone, and I think on completion of that 1 hour candle would be a more ideal place to put it. But then this is the zone, this is the money trade, the money spot, and then I'm looking to target this blue zone here. So that's on natural gas. I'm a bit bullish on that. Let's see what happened to Bitcoin. Bitcoin, I said I'm looking to buy dips. This is on the daily. I'm looking to buy dips, but the dips that I'm looking to buy will be in this area down here at 19,662. This is the area that I'm looking to buy dips. If I get rejection in this area here, then I'm looking to buy dips in that area. I have just put it as a zone here. I've put it as a zone here. So this is the zone that I'll be looking. This 19.5 to 19.662. This is the place that I want price to really come down, get liquidity. If we get rejection, if we get a bullish engulfing, if we get a bullish hammer, if we get some sort of reversal candlestick pattern, then I'm looking to take the trade here and target this 20.485 as a first target, take some off there, and then maybe go up to 28.40 as a second target, really. This is my take on Bitcoin. I'm bullish, but then I need price to come down and get liquidity down there. The same goes for Ethereum as well. It's nothing happened really yesterday, but I want this level to be tested here. This is 1330 level here. I want this level to be tested. If we test that on rejection, then I'll be I'll be happy to get in. This is the money spot. Yeah, this 1328, 1330. Remember, the level can be a zone also. You're looking at, it's not just strictly a level, it can be a zone. So 1330, 1328. If price comes down here, then on an intraday basis, I'll be looking to probably take a buy here, put my stop down there, maybe just below this, hide it down there, take some off there, and then ultimately you're going to 15.05. But this is not a day trade, this is more like a swing trade now. But for today, if price comes here, I'm taking the buy, and then possibly target here if the risk reward is good. So I think that's all from me, Joe. It's looking pretty exciting in terms of the NFP coming out. So I think we see a lot of volatility, and yeah, we see
Yeah, for
how that.
sure.
Um,
Anyway, good work, Taff. That was
mm,
a really nice roundup there. I love the way you break down those markets and look at the intraday support and
mm,
resistance levels. And
mm,
yeah, hopefully some good guidance there for anybody looking at commodity markets or
mm.
the crypto space today. Um, Okay, so the next phase of the video is to talk about our gun to the head trade. So just to reiterate what it is that I'm going on about, if you're new to the video, basically we pick trade ideas live on the video. Full accountability and transparency. We're not trying to hide anything. We just come up with some trade ideas live on the video with stops and targets, and they're all placed at markets. They are also published to our TradingView profile. So if anybody wants to check them out to make sure we're not trying to treat the system, you can do so by going to signal_center. Now, the way we do this is that we place the trades now, and the trades will expire or be closed off at 9 p.m. UK time, or when the stop or the targets are achieved. And we've been maintaining a spreadsheet of performance now for a significant period of time, over 700 episodes of Talking Ball. So there's a lot of content there if anybody wants to go back through the archives and check it out. So in terms of yesterday's trade ideas, Taff already mentioned that he went short of silver,
Silver. Yeah.
and at 9 o'clock you were 0.06 R on side. So a win is a win,
Yeah,
Taff. That
win is
goes
a
down on
win.
the win
Yeah,
statistics. So
it
we'll take
counts.
that.
It counts.
Um, it does. And
Mm.
I went short of Euro US dollar, expecting this to pull back, and it did very nicely. It came up just shy of my target at 9 o'clock. I mean,
Nice, man.
it's actually gone on to hit it, but
Yeah,
at 9 o'clock when we closed this out, it was at 3.7 R on side. So it was looking for a total of 4.17. 3.7 is not too bad, right? We'll take that all day long.
that is very good, man.
Happy days. So
Hmm.
fresh start today. We've got to go again. I've got one ready. I'm still of the opinion that we're going to see lower prices on sterling and higher prices on the US dollar. Just looking at the daily chart, first of all, just to kind of set the tone for this. This is the daily chart. As we know, sterling been really up against it, trading in a big downtrend. We saw a really nice rally in recent sessions, but it looks as though we are now starting to roll over once more to the downside, coming up into resistance around 114. Sorry, 114.09. On the intraday, I am clutching at straws a little bit here, and I think I'm reaching a little bit in terms of trying to pigeonhole this into a specific setup. But what I've got on the hourly chart is a pullback, as we've seen. We broke down through this swing low here on the at 4 o'clock on the 5th of October, and I don't know, you could maybe call this some sort of flag or pennant pattern which is forming. That would indicate a continuation in the direction of the short-term trend, and therefore I'm going to try and sell this at current prices. It's trading at 111.60. I'm targeting a move down to support at 109.31. That wick of the candle that we've got there from the 26th of September is where I'm targeting, and my stop loss is at 112.45, giving me a risk reward ratio of 2.89 R. It is going to be volatile today, and of course there is going to be some, well, especially some volatility in the dollar index, given that we've got this non-farm payroll number at 1:30 UK time. So highly speculative, as all of these trades are. So if you are interested in that setup, please do take it with a pinch of salt. It is something I've literally just come up with on the video this morning, but let's see if there's any value in it between now and 9 o'clock. Taff, have you got one ready? You indicated you might be looking at
Yeah,
natural
yeah.
gas.
I want to go long on natural gas, but I think I'm just going to reduce my ambitions here in terms of the target and probably put it right around the 7.28. So I'm looking for this shaded zone here to hold as support. We had a left shoulder here, head in the. With, I'm postulating that this could be the right shoulder right over here, right? So yeah, so I'll take it at market. I'm gonna buy natural gas at 6.866, and then I'm targeting 7.28, and my stop is at 6.678. Yeah, let's see how that goes.
Brilliant. Okay, looks good to me. Let's see how it works out between now and 9 o'clock this evening. So, in terms of data today, we've continually referred to this, but we do have the non-farm payroll number due out today at 1:30. We also have the Canadian employment out at the same time. Just in terms of managing expectations here and let you know what is expected. The consensus forecasts are for an increase in non-farm payrolls of around 265,000 from 315,000 previously. So 265 100,000 is the number you're looking for. In terms of the unemployment rate, that's expected to hold at 3.7%. Now, also what we mentioned is that a robust increase in payrolls and a strong increase in wages would keep the Fed in hawkish mode. That means they will continue on this path of hiking rates and not really supporting the markets in terms of any other fiscal support. A weak number would increase speculation that the Fed will pivot from this rate hike trajectory that we're on, and therefore the markets could respond quite significantly on the upside. We could see a big move to riskier assets if the number comes in weaker, which is kind of backward if you think about it, because we don't really want to see bad numbers, but at the minute it
Yeah,
looks like the market is looking for bad numbers,
bad
clinging
is
on.
good, man.
Yeah, bad news is good news.
Mm.
So keep that in mind. 1:30 UK time, that's due out. Expecting volatility. So be braced, be at your desks or on your phones, wherever you're managing your positions, but do make sure that you do have appropriate risk management according to the size of your trading accounts in place. So that is that from us for the week, Taff.
Yep.
Steve should be back next week. He'll be back from his holidays. So it'll be all three of us next week. Very much looking forward to it already, and hope everybody has a fantastic weekend, and best of luck today with the non-farm payroll later on. Cool. Taff, have a great weekend, buddy, and
Same to
we'll
you,
see
mate.
everyone next week.
All right. Cheers. Bye, everyone.
Cheers. Bye-bye.